Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 7th of July, 2020. This is episode number 1791. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that is a little bit mixed, a little bit pushing to the risk aversion side to lower risk this morning. Uh, we're looking at the DAX being the laggard today. The DAX is off 177 points, down 1.39%. The Euro Stoxx down 1.2%. The Russell's off 1.12%. The Russell's just really whipping. Dow Jones down a modest 223, and the S&P's down 20 points. It looks like we tested higher overnight and have pulled back. It's one thing I gotta tell you about is that this morning my data is all messed up. So unfortunately, I will not get into much detail today, as I don't want to mislead you. I don't think my data is correct at all. Need to have that fixed. And so I'll make do with what I have, but the way things look is that the market has peaked out for now. Although yesterday was a very strange day. The expectation yesterday, and I'll go over that here in a second, was for a quiet sideways day. And we did get that. That is common after non-farm payroll Friday, in this case, non-farm payroll Thursday. And it sat sideways. We didn't even break the IB stat, which has a 97% historical probability or something like that. We didn't manage to get that stat even. So we'll see how it plays out this morning. We did get some numbers out of Europe, but looking ahead, we have IBD tip economic optimism at 10 Eastern, the JOLTS job openings at 10 Eastern as well. And then we have three Fed speakers in a row, Fed's quarrels, Fed's daily, and Fed's bargain before we get to the API crude oil stock change. The Fed speakers start at 1 Eastern, and one of them is at 1 Eastern, and two are at 2 Eastern. And then at 4:30, we get the API crude oil stock change, and that wraps up the day. So low key day all around. Although it is Tuesday, generally Tuesday after NFP, we see the market take a stance and push directionally. So we'll be looking for that today. Here's what I expected yesterday. Yesterday, I expected the market to revert back to the prior day's range. We were opening in a gap above and to push towards 3180 and to hold sideways. So that's scenario one, the green right here. Expected mostly a sideways balanced market, a double distribution, one distribution up top, one distribution down below, but mainly balanced. And that's pretty much what we got. We didn't manage to push to 80 or above. Here's, again, my charts are messed up. My profiles and some of the lines are not correct on here, but the bars are. So 31.74.50 is the peak. We did manage to push into the prior day's range here as expected. And this profile is actually a kind of a double distribution profile, if I recall, as expected. So overall, we had a higher high, higher low. We're continuing to one time frame up, and it looks like we may be tackling that or ending that today. So today we need to pay attention to a trip back to 31.35.50 and a push to 31.20 and potentially a test at 31.04 to set a base. The key element to take away today is that yesterday was a balanced day and we are opening below it. So it's important to keep that in mind. So here's how yesterday traded again. The profiles here are a little bit messed up. Not sure why yet. I think I need a full data reload, which takes a little bit of time, so I can't do it currently. But overall, we gapped up. We had a nice, clean opening auction out of range. We get into an impulse up to 74.50, and then we pull back to what sets up to be a typical impulse pullback mid for continuation, which fails. So right there, there's a -1 trade that is stopped out completely. It consolidates and blows right through. There's not much you can do to forecast that, as it looked like it was done testing lower and was going to leave a small gap beneath. And then with the impulse up, we had a full reversal. Now it starts to dip into the prior day's range. The green is the prior day's high, which is Thursday's high, and we're dipping into it. And then so we're looking for a mid pullback again right here. Does it on point, on the dot, gives a small rotation of about 5.5 points, and then blows right through. That's another -1 there for a loss. And so we start to see that actually it is trampling all over the mid, all over VWAP for the day, and we have a balanced day. We end up with 2 losses for the day. Par for the course for the Monday after non-farm payroll, after a holiday. It is what it is, but that's what we got yesterday. Yesterday was mainly a scalping day, and nothing really worked out structurally, at least not till the closing push right in here. The pullback looking for continuation, but by that time was up and we're pushing against the cash close. Not a fun day yesterday, pretty boring, so my attention turned elsewhere. In terms of what we carried forward, let me just pull up. There we go. Pull up the overnight session. So here it's plotting the proper profiles. You can see there a double distribution profile for yesterday. The overnight session, I was expecting this to continue higher, and I actually posted it in the head trader channel at Convergent Trading that we're likely to continue higher in the overnight session. And it looks like we pushed to 31.84, and then sellers stepped in pretty much sideways from there until the European Open, which is right there at this big bar. And we've been weak since. The profile overnight shows a decent volume, 293,000, but a profile that only a mother could love. It's a really ugly kind of price discovery profile. It looks like it kept shifting down and accepting prices lower with these multiple distributions with a point of control at the low. The expectation here is it's likely to be weak testing up, and the path of least resistance, in my opinion, in the current setup is lower. So that's how the overnight session is setting up. Delta is negative. The session is mostly, the overnight inventory is mostly short. We may see a little pop up into the 3161, the 3164 from the prior day. So somewhere in here, we're likely to see some resistance, 3161 to 64. And if we do get that, then we are looking to hold that down into the 31.38 quarter for a test of the overnight low, giving us pretty good risk reward. The risk on that trade, really, we wouldn't want it above 71. So it's about 7 points if you're using a wide stop, lower quantity for a push down about 25 points. So relatively decent. Short term, we're looking at a 4.5 to 5 point stop and a short initial target of about 10 points. So that's how that trade sets up there. Potentially, that'll be our scenario 1. Looking at Bookmap, I need to move quickly here because I need to get offline and get all of the master and stock zone levels done for convergent members, as they haven't been done yet. I still need to reload my data. It's kind of a disaster today. Here's what the overnight session is showing us. We have we had a market that opened up, pushed higher, and squeezed. Let me shift this over so we can get good distribution here. Squeeze higher, and then we get a push into this liquidity that actually pulls. We do have a little bit of a cushion there, and then it just slides lower from there. A bunch of liquidity came in above us, but to me, the way this is setting up, the way this looks, the heat map for the overnight session, it looks like it is going, it's likely to be a pretty choppy day today. We can see there's liquidity at 35, 25, 60, the 60, remember 61 to 64 area right here. This right here is your backup. This is the area that we would lean against for the short on the way up for a push down. This is an important area above there, 3180, 85, 90. These are basically option strike liquidity, resting liquidity in the book. In my opinion, the way the liquidity looks, the way the order flow looks, it is likely to be a non-committal day. I would be quite pleased if it did take a directional to the downside, and the downside idea is built strictly on the fact that we've been one-time framing up and we were not able to yesterday. So, this is a kind of a price action based assessment. So I'm not going to use profiles for today because you know what, as traders, we are very malleable. But I'll show you what's expected for today. So, so here's what things look like for today. This is going to look very odd to you because it's just a dead clean chart. The best kind of chart, really. So each one of these lines represents a day, right? Okay, so this is Thursday, this is Friday, and we are currently trading right here at 31.52.53. And what we have done is we've put in a low, a structured low. We put in a higher low, so now we're starting to trigger one-time framing up, one-time framing up confirmed, one-time framing up continues, one-time framing up means higher low, higher low, higher low, higher low, that we don't care if it makes a higher high. A lot of people define the trend as higher low, higher high. I don't really care about the higher high on a trend up because as long as it's defending the low and the low is being seen as too low or an extreme and people are stepping in to defend it, then the trend continues even if it doesn't make a high. It is a break of the low on a trend up that changes it. And so today we are actually operating below yesterday's low, and so we are likely to end the one-time framing up. And as a result, I'm looking for the market to open up somewhere in here, to open up, make a run for 61, potentially 64, consolidate, make a rounded top, and then back to the open, and then start working its way to 43 right here. 43, this is an important area, and then potentially down into the 38 area before it takes a bounce. That is scenario one. So that would give us a nice rounded top, to work with, and the beginning of a market that is in a pullback. Okay, again, I know my charts look really weird here, but it's cleaner, it's better to work with that than with profiles and other lines that aren't correct. So we very easily strip it down to just the bars and trade off of the bars, the price action in that situation. I need to reload my data to get that fixed. Secondary is an open that continues to explore lower. I expect us to battle at 43 again. So the 43 here, battle at 43, push through, and then accelerate up, close, get back into the range, and then hold sideways and squeeze into the close. The market has not been giving up prices to the lower side. It hasn't been giving them up easily. Buyers are often stepping in. It just seems like infinite liquidity available on the sidelines in this kind of market. So if it does push back into the range, we're likely to see a short squeeze again, as shorts are likely to pile on today, as it shows in scenario 1. Does that make sense? Okay. So that's what we're looking at for today. Good luck. Oh, and by the way, on Thursday, I'm going to be appearing with the EdgeClear team on Futures IO to talk about edge pools. I'll provide some information on that tomorrow. If you're not following on Twitter, please do. You can find me at twitter.com/futurestrader71. Just add me and you'll get the invitation for that. I'd love for you to register for that webinar. We'll have the team on to talk about what edge pools are. I think these are big advantage for online traders and a unique product from EdgeClear. Hopefully you've checked this out. Take care, and I'll catch you tomorrow morning. Sorry about the mess with the data, but it's all the same. Trading is trading. Good luck.